Shares of Wipro trade 4% lower after reporting an inline set of September quarter numbers. Management tells CNBC-TV18 that the third quarter will be impacted by seasonal furloughs. Stock lower.
Eternal trades under pressure. The company's revenue sees strong growth, but management indicates growth in the food delivery segment is expected to remain slow in the near term.
Paint stocks trade with a bright green shade as crude prices fall to a 5-month low, heading for the third weekly loss. US crude inventories rise by 3.5 million barrels. Festive cheer further boosts sentiment.
Shares of Zee Entertainment trade lower after the company's EBITDA and profit fall short of analyst estimates. The company also reports a negative operating cash flow in the second quarter.
And a flat debut on the bourses for Canada HSBC Life Insurance. Shares reached at 106 rupees, which is just about a mild premium to its issue price. We'll be joined by the management shortly. Stay tuned for that. You're watching us here on Chartbusters on this Diwali special on CNBC TV18. We wish you, your family, all the viewers a very, very happy Dhanteras and season's festivities, and markets are actually doing just that, celebrating in those festivities. We join you live from the CNBC TV18 Motilal Oswal studio. I'm Mangalam Malu, with me Vinny Motiwala, and we bring in, the Dhanteras pre-Dhanteras trading session with a 100-point move on the Nifty. It's conquered the 25,600 mark, closing in towards that 25,700 mark. The Nifty is at a one-year high, but more importantly, the Nifty Bank went within 5 or 6 points of a fresh record high. The fresh record high in the Nifty Bank is 57,628. Where is it right now? 57,615. The high today, 57,621, thereabouts. So just keep an eye out on that index. Keep an eye out on the markets, because there is a fair amount of festive cheer in our markets. In fact, now it's just a few points away from a record high. Perhaps in this show itself, it happens.
Absolutely. Hoping for that, Mangalam. Firstly, festive greetings to you as well, and festive greetings to all our viewers. But let's take a quick look at the mid-cap space, Nifty mid-cap. That's the one that's not cheering as much as we're seeing in terms of the Nifty Bank or the Nifty. Nifty mid-cap is trading with the cuts of almost 1/10 to 2/10% in today's trading session. Small cap, that's managing to hold on to gain. So keep an eye out on that. Advanced decline ratio is somewhere in between only, not much of a gap that we're seeing today. So keep an eye out on that one, around 1,200.
I'm sorry to interrupt you out there. The Nifty Bank has hit a fresh record high right now. A fresh record high for the Nifty Bank. That's the headline of this morning right now. Ahead of the Dhanteras session, the Nifty Bank has hit a fresh record high. Go ahead, Vinny.
Fresh record high, 57,000, and what are we watching out of 57,000? 636, 637 is what the fresh record high is. So yes, surely cheer coming in there. Let's keep that with the cheerful side as well, because FMCG, that also is managing to hold on to strong gains today as well. Today also, in terms of the sector, top sectoral gainer coming in from the Nifty FMCG side as well. So keep an eye out on that, but the cheer coming in obviously for Nifty Bank today. But Mastek, that's what we want to focus in on as well. That's the stock that reported its Q2 numbers. Subdued quarter that came in Q2 FY26. Dollar revenue is near the flat line, while profits saw a rise of around 6%. We're joined by Umang, the CEO at Mastek, to discuss more in terms of the numbers, the outlook of the company going forward as well. Umang, good morning. Thank you so much for joining us on the show. Firstly, festive greetings to you as well as your team and everyone in your family as well. In terms of overall, when you're looking at it, the CC growth this time is coming at around 0.2%, while in terms of peers or the companies that have reported their numbers in the IT sector, they've given a growth of around 2%. What is it that now could lead to a pickup in terms of this growth, or what was it that was left out this time for Mastek, which led to this muted growth in terms of CC revenue?
Good morning, Vinny, and festive greetings to you and all your friends and family too. So yeah, it's been a steady quarter for us. The CC growth, as you know, is around 0.2%. Which is, I would say, definitely not as high as we would have expected it to be. Some of it is still, I would say, steady, performance as far as our US business is concerned. The US business isn't, the demand cycle in the US still has a lot of macro uncertainties, which is differing the decision-making cycle for our customers. and that's leading to a little more short-term view by many of our customers as far as their discretionary spend is concerned. And that's been a theme that we are still trying to work on. We now have a new leader in North America, and we are very excited to look and work with him. Having said that, our UK business definitely continues to grow strong. We had seen again a 4% quarter-on-quarter growth with our UK business across all sectors, and we feel very confident that the combined business, as the US starts to ramp up going forward, that's going to be a key for really driving the Mastech business to its true growth potentials, and all hands on deck focus towards executing and driving that.
How far are you from growth returning? Because, it's lower than peers. What do you think caused that?
So there are two parts to the equation. I think the way we are looking at our current business, a lot of it is AI-driven efficiency asks that we are seeing. The take that we are taking to the market today, Mangalam, is AI efficiency asks are real. AI productivity gains are very, very real. We want to really go out and deliver it transparently to our customers rather than just doing an eyewash around. Customers are cutting through and seeing that.
About that.
And that, I think, step back and demonstrating the efficiency today is what will really create the roadmap for a significant uptake as we go forward. So we are in some of our key customers in the mid segment and some of our larger customers also demonstrating, very tangible AI ROI to them, which is around productivity and efficiency. As we do that, we also are working with them and discussing much larger piece of work that currently sits with some of the larger players that we could gain a significant share of. So a lot of AI for technology-led efficiency is what we are demonstrating today. This kind of tangible performance, we believe, is the core for building a stronger AI-led business as we go forward.
Have you lost an order to Infosys recently? I just wanted to understand, because you've been working with NHS for a while, and NHS recently awarded a near $2 billion, almost 14,000 crore contract to Infosys. Were you keen on it? Was it something that you were looking at as well?
No. I think it's an order in a very different space, although it is still NHS, but it's a very different wing and arm of NHS, and for a service line or capability that we were not competing for. So it's not a business that we have lost to them. Our current business with NHS is more around the preventions and the data-led, efficiency or decision-making that they're doing. That continues to grow strong, and we see strong demand. This current business that Infi has won has no direct correlation to our piece of work that we do with NHS.
Okay. Umang, in terms of the US business also, I want to understand that contributes around 23% of your revenues, right? So that has also been a bit slow in terms of pickup, not coming as much as one was expecting. When can you start seeing strong growth here? What about the US segment margins as well, if you could give us any indication there?
Yeah, US is a business that is of extremely high focus to us. That's been a business that has been more flattish, and that's been the reason why we haven't been delivering as much growth as we should have. Although our UK business definitely is pulling the weight and delivering phenomenal growth. From a US standpoint, we've been making some structural and people corrections. We've gone through those changes now. We have a new leader in place, like I was saying, a very hands-on and capable leader that we are very confident will start driving the business forward. Also, two other parts, a lot of the US business current discussions are very, very active and centered around AI, which is more of AI for technology, which is around AI efficiency and productivity gains. Some of these sectors that we are in, especially around the healthcare payer or retail, also are experiencing challenges as far as their bottom line performance is concerned, and the customer are asking for those kinds of tangible savings to them. Our current posture is to go out and deliver those savings to them, and therefore create the stickiness to deliver much larger business program, which is what we're also discussing with them.
All right.
I think it will take us another 2 quarters before we start really going into very strong growth momentum in North America.
Take that point just quickly before we let you go. Running out of time, Umang, on the margins, you've delivered a 50 basis points improvement despite, passing on the AI savings to your customers. What do you end this year with when it comes to margins, and how much of a wage hike are you factoring in the third quarter?
So margin focus and operations improvement has been a constant theme that we've been looking at for the last few quarters consistently. If you look at our revenue per employee is growing phenomenally. Like I said, it's a reflection of the amount of AI-led business that we are executing. And I strongly believe that our margin performance, while we are offering some of the efficiency gains to our client, some of it is also benefiting us, and it's a share between the client and us, and which is what is starting to reflect on our bottom line and will continue to reflect in our bottom line efficiencies as we go forward in the rest of the year and the years going forward. So I think the margin or the bottom line performance is going to continue to stay healthy as we move forward.
It will stay healthy as you move forward. Umang, thank you so much for joining us this morning and talking to us about your numbers and outlook of the company going forward as well. That was the management of Mastech for you all. But on that note, we're going to actually slip into a very short break. But a quick note for our viewers. As you can see on the screen, there is money control stock score just about the line graph. Right now, you can see for Mastech, it's 64. Now, this is a score assigned to each stock based on Money Control's multi-factor algorithm. It is calculated by analyzing over 40 parameters, including both current and historical financial statements, price charts, and technical indicators for each stock. Each of the individual parameters considered for calculation of the 4 factors are assigned a score, which is then aggregated to arrive in the overall Q factor score, G factor score, V factor score, and T factor score. Remember, this is not a buy or sell recommendation. Any investor or viewer is advised to carry out necessary due diligence on their own or through a certified registered financial advisor for investment decisions.
Market continues to do well. HDFC Bank powering the Nifty Bank ahead, which is just near record highs after hitting it just a few minutes ago. Let's talk about the new listing on the bourses, a flat debut on the bourses for Canada HSBC Life Insurance. The stock listed at around 106 rupees per share, still holding around those levels itself. Anuj Mathur, who's the MD and CEO of the company, joins in to discuss more. Thanks a lot, Mr. Mathur, for joining in. Festive greetings to you, your team, your family. More importantly, a momentous day for you as well. So congratulations on the listing, and we wish you good luck for your journey in the stock markets from here on. And as the journey has begun, you'll have more conversations with us, and perhaps we'll press you a little more for numbers too. Let's start right now. The first half of this year, your new business premium, your APE, etc., were all slightly subdued. What's the target that you have for the industry in the second half of this year, and how much better than the industry would Canada HSBC do?
Yeah. First of all, thanks for having me on the show. And I would like to thank our investors. We had a successful IPO. It's a very special day, as you rightly said, for us when the company has got listed. So we announced our quarterly results, the first quarter results. The second quarter results we'll be announcing. H1 results we'll be announcing in the next few days. So as a company, we have done very well. And our strength lies in the bancassurance model, which we have. We have over 12 crore captive customers. We have access to 15,700 branches. And as a company, we are very, very profitable for the last 13 years, very, very healthy solvency margin. And we are very confident that in the past, we have actually outperformed the industry in terms of growth of APE. And we are very confident that that will continue. So we will be announcing our H1 results in the next few days. But Q1 was good for us.
Hi, Mr. Mathur. Good morning. This is Vinny joining in the conversation. I just want to understand in terms of the VNB margins as well, right? So currently, when you're looking at it, VNB margins as on 30th of June 2025, the numbers that we have, 19.5% was your VNB margins. Now, versus peers, it's slightly lower than them. So I want to understand what maybe could lead to higher margins going forward from here on, or are these your peak margins? What are we watching out for now?
Thanks, Vinny, for asking that question. See, I'd like to mention that actually the VNB is also dependent on how old the company is, because the older you are, the book is more, and then the VNB also comes from that. So vintage plays a very important role. Another important factor in VNB is the cost. And our cost ratios are very, very low. We are very efficient. So as the book grows, the business is growing. We have seen very good growth in the past. So our VNB also, in accordance with the growth of business, will accordingly grow. I don't want to make any forward-looking statements right now. But if you see our VNB in 17th year of business, actually, it is in line with the industry. I would say slightly better than the industry in the 17th year of business.
You know, some of the private players have VNBs anywhere between 25 to 29%. Do you have an aspiration to get there, and what's the path?
So you see, most of the insurance companies came in the first wave, particularly the listed players. They got listed. They started business in 2000, 2001. So these businesses are almost 25 years old. We started our business in 2008, so we have history of 17 years. So yes, our book has grown. Our VNB has also grown over a period of time. And as I mentioned, as the business grows, as the vintage increases, the VNB is bound to increase. So I think we will see good growth in future, but I can't put a number right now. It will not be right for me. And I think in the H1 results also, you'll see that we will be disclosing our first half VNB.
You have an aspiration to improve it by a few hundred basis points over the next few years, right? I mean, not a specific number, but that's the direction.
That's right, because as I mentioned, we are a very, very efficient company. Cost ratios are low. Business, our top line has grown higher than the industry. So going by all these assumptions, there is no reason for our VNB to be lower than what we have done so far. So yes.
Okay, and what about the ULIP share as well? That's what I want to understand. I think last time when we spoke, you said that ideally you would look at 40 to 45% would be from ULIP. Also, so what does that mean for your margins? How much would that start adding? And when would you come down to this 40 to 45% share from the ULIP side?
Yeah, so I'll say last year was an aberration because last year we saw markets going up significantly and we saw customer demand coming for more ULIPs. Traditionally, we have been kind of traditional focused company because our customer profile is such. We have customers from tier 3, tier 4 cities as well. So if you look at our product mix of the past, we have been around traditional focused company and roughly about 55 to 60% has been our traditional mix. And that is something we are very confident that we will move to that mix. In fact, if you see our first quarter, we have seen actually growth which is happening in the traditional business and ULIP mix has gone down slightly.
All right, take that point. Wish you good luck, and we will have a conversation with you once you've reported your second quarter numbers and perhaps get a more detailed look into what your numeric guidances are. But for now, enjoy the day, enjoy the occasion, and once again, festive greetings to you and your team. Take a short break, come back on the other side, more markets and stock-specific action on Chartbusters.
Welcome back to Chartbusters on CNBC-TV18, and we are seeing record high levels continue for Nifty Bank. Nifty also is about 25,700 at the day's highest point is what the Nifty 50 is trading at as well. So yes, day's highest point for the Nifty Bank. Nifty also, keep an eye out on that one. Nifty IT, that's the one bit subdued after numbers that have come in from some of these IT companies. So that is something that we're watching out for. Nifty is actually at a 52-week high, so it has hit the highest level in almost a year. Keep an eye out on both these, Nifty Bank as well as the Nifty going forward. Keep an eye out on that. But with that, we're absolutely out of time on this edition of Chartbusters on CNBC-TV18. Thank you so much from Mangalam, me, as well as the team who put this show together. Up next, your trading hour.